Hi everyone, today I'm going to talk about crypto contagion. Over the last couple of weeks we've seen the markets in crypto totally tank, and I'm going to go through why that happened, why Bitcoin was dropping, why Tera and Luna blew up, and dig into some of the details. Before we begin, I want to give a shout out to my sponsor, Ledin. Ledin is the best place to borrow against your Bitcoin using your Bitcoin as collateral, so you can borrow against it, use those dollars to go buy a car, go buy a house, or buy more Bitcoin. And so they've got a great product for that, or you can lend your Bitcoin to them and earn a yield. Okay, cool. With that being said, let's go ahead and hop into the article. So I write this first on the Held Report. The Held Report is a newsletter that I come out with every Thursday. And then on Sundays, I talk about it on my YouTube channel. So here's where I write about it first, and let's go ahead and dig in. So over the last couple of weeks, it's been nuts. We've seen over $500 billion wiped out in the crypto markets. So what caused this? Why is the market collapsing like this? Well, let's dig in. Something I didn't include here at first is the macro sort of environment. So right now, tech stocks are selling off in a pretty dramatic fashion, and we're starting to see, kind of widespread fear enter the macro markets. So markets not in Bitcoin or not in crypto. So yeah, that's a big I would say backdrop to what I'm about to mention here. Cool. So you've all probably heard, and I would assume most people who listen to this are already crypto people. You've probably heard about stablecoins. So stablecoins there's two different types. One is a centralized or fiat collateralized stablecoin. Now, what is that? So that's like a Tether or a USDC. So for each Tether that exists, there should be a real world backing of an equivalent dollar, which could be a dollar or a representation in bonds or treasuries, etc. And those are very, very stable because if people go and try to redeem their Tether for a real dollar, there is backing of that. So if there's a run on the peg, so the peg is a dollar, worth a dollar's worth of value. If people all en masse try to redeem it, there should be enough to pay everyone their equivalent USDT. So that works really well, and Tether's been around for almost 7 years now. There's another form called a decentralized form of stablecoin, or an algorithmic stablecoin. So what they use is bonds or coupons to incentivize market participants to maintain the peg, like Basecoin, and some use crypto assets as the reserve, like Maker. So this is cool in theory, and we want something to be as decentralized as possible. But there's a couple different problems that can arise. And so I wrote about this about a month and a half ago when I first covered Tera and Luna and stablecoins and why Tera was using Bitcoin as a reserve asset. So here's a couple issues that can arise. Oracles. So what price should the stablecoin maintain? Prices for fiat assets must be piped into the blockchain from external sources. But some of these require trust or could be manipulated. They're centralized. So if the stablecoin is fiat collateralized, so there's like Tether, that one's completely centralized where people can go seize it instantly. And so all those Tethers on chain would be worth nothing if the US government seized the bank accounts of Tether and said all of these are frozen. And then maintaining the peg, and this is what happened this week. Very few fiat pegs have been maintained throughout history, and that's even with the resources of an all-powerful government. So the idea that a decentralized currency could maintain a peg, aka maintain a dollar price and hold that steady, is almost impossible. So there was a hot new stablecoin on the block called Tera that was using Bitcoin as part of its reserve currency. So it held billions of dollars in Bitcoin and was going to use that as collateral. So if the market started to dip, they could sell Bitcoin and use that to bolster the price of Tera. Hey everyone, I want to pause here real quick to give a shout out to one of my sponsors, Choice. They're rebuilding retirement accounts for Bitcoiners and enabling you to trade real Bitcoin, crypto stocks, and more in a single tax-advantaged account. Thousands of Bitcoiners, myself included, have already signed up to start investing. I spent a long time looking for a solution like this. I'm super glad I found Choice. Check it out at www.choiceapp.io/held. And the link is below in the description. Oh, and one more thing. I wouldn't be working with Choice if they didn't let me hold my own private keys. All right, so things melted down this week. Things got really crazy. And so in my last newsletter where I talked about algorithmic stablecoins, I said that there's a serious flaw with them. In extreme market conditions, this system can break. So what they've done is use Bitcoin as a reserve asset, which should help it stabilize in those extreme conditions. However, no one knows if that will work. Well, as we saw, it didn't work. And so basically Tera and Luna cratered. And a lot of people even thought that this was an attack by financial institutions like BlackRock or Citadel. And the rumor spread to such a degree that they actually had to BlackRock actually issued a public statement denying it. So Tera, which is the stable coin, so Tera, like it's called UST, US dollar Tera, it should be equivalent to $1. And it essentially went to 0 or 40, an extremely low value. And so what happened is as Tera was selling off, so as people were trying to redeem Tera for actual money, because it's just a representation of a dollar, there wasn't enough Luna or Bitcoin to be sold to bolster the price of Tera. So essentially the price cratered, people lost confidence in it and tried to redeem more and more. And so it had the same fate as every other fiat currency in the world. It's trying to maintain a peg. Eventually the peg will last a while and then it breaks. Luna, here's the associated coupon/bond that was sold off in a similar fashion. That hit basically 0, so less than a penny. And it was worth $119 in April, which is insane. Now, this created a contagion effect, and the title of this YouTube video is Crypto Contagion. So Bitcoin during this moment started to sell off too. So either Luna was selling their Bitcoin to bolster the price of Tera, or people thought that they might be selling their Bitcoin and sold in anticipation of it. Regardless, Bitcoin tanked and actually hit a price of like $26,000 at kind of pure peak panic mode. And so the complete meltdown of Terra Luna and also the crypto market. So Solana was down 40% in one day. Ethereum was down 25%. This really started to spook investors who started to doubt if all stablecoins might have flaws. And so this caused a sell-off of USDT and other pairs. So USDT is Tether and a core component of the crypto ecosystem. It's such a core component that it trades more volume in a day than Bitcoin, Ethereum, and the next dozen cryptos combined. But as you can see here in the screenshot below, as fear spread, USDT started to trade at a discount, so below its dollar peg, and traded all the way down to 94, a little bit below 94 cents. That's pretty wild because people were so fearful that even with the stable coins that have assets you could go redeem for, have real world assets like in a bank account, they got so panicked that they started to sell those off in a discount, which is insane. Market makers eventually arbitrage this back to an appropriate price. As you can see here, there are little blips that occur, but nothing so dramatic as this. It was a very, very intense moment and really represented, I think, peak fear in the crypto markets. People became very, very fearful about everything. And so everything sold off in a dramatic fashion. And people even started to question the fundamental structure of the market. Is Tether even there? And so this chart represents that very, very completely. So basically what had happened is crypto contagion was started by Terra and Luna. Bitcoin and other crypto assets sold off. People became so fearful in this moment that Tether even traded at a discount. But I think as you can see, that moment was just peak fear. There actually isn't a major issue here longer term. So that's what happened over the last couple of weeks. And I think, to conclude here, I have some great quotes from people about algorithmic stablecoins and what the fate of those should be. Nick Carter, really, really great thought leader in the space. He goes, "We couldn't have possibly known this would happen. We were just conducting bold, fresh experiments." He's being sarcastic here. What he's trying to say is that these were always inherently flawed. That seniorage shares or like coupon bond stablecoins failed many years ago. So he's right. This Terra Luna was just another experiment on that. But I think what he's saying here and what should ring true is that, okay, we've tried enough times to make this work and it hasn't, so we probably shouldn't try this in the future. This experiment's actually been running since 2012. So Nick Carter highlighted this where back in Mastercoin, which is one of the oldest, the first ICO, they actually tried to come up with something like this back in 2012 or propose something like this. And then Do Kwon, the founder of Terra Luna, came out with a statement where he says, I still believe that decentralized economies deserve decentralized money, but it's clear that Terra is not that money. So I think to conclude, stablecoins are a really cool idea, using algorithms to be able to create a stablecoin. But I think what we see is that inherently there's always going to be a run on the peg and there won't be enough assets to support it. And ultimately that leads to a downward spiral. So it's been a cool experiment, but yeah, I think we can say that this is the end of algorithmic stablecoins. Hope you enjoyed this. Hope this gave you a little bit of an explanation of what happened over the last week. If you like this, subscribe or share this with your friends. Helps with the algorithm. Gets this content out to more people. And appreciate you watching. All right, cheers. Bye.